Right, so ICICI Bank numbers are just out, and it's a very interesting result. Let me tell you what's happening over here. So now the NII, we built in a figure of around 9,100 crores, which was on the upper side. It's actually come in ahead of that at 9,300 crores. So the credit growth hasn't really slowed down. It's continued, right? Now on the operating profit, we had a figure of 9,600 crore odd, and this is including inflation from income coming in from the stake sales, right? ICICI has actually posted a number which is quite a bit higher than that at 10,776 crore for your operating profit. So that shows that despite people building in the income from the stake sales, there has been improvement in the operating profit as well, because it's come in higher than that, right? Now, what's interesting to notice on the PAT level, it's a bit of a miss, right? 2,600 crores versus our poll, which indicated 3,000 crore. But then all the broker polls had provision built in of 5,600 crore only. ICICI's COVID provision alone this quarter is 5,500, and the total provision this quarter stands at 7,594 crores. So that's 2,000 crore higher than the average broker estimate. So if you actually factor that in, then the profit could have been significantly lower than this even. So in that sense, I'd say it's a decent number. The capital adequacy stayed pretty much the same. It's reflecting that on that front things are okay, plus we know they're going to be raising money. What's interesting is, yes, the gross NPA as a percentage of total loans has come down, as has the net, but then we all know that this is a moratorium quarter, so you're not recognizing a lot of NPA, so you can't take this number for face value. You have to wait and see what happens after the Q2 numbers are out. And just yesterday, we know RBI put out a circular saying they expect 14.7% spike across the system in NPAs. So this number we'll have to wait and watch next quarter, but on the face of it, it's looking that despite higher provisions, the PAT is higher, the operating profit is far higher than estimates. So it looks like a strong show from them. But we have Lalitabh Srivastav on the line with us now. Hi Lalitabh, always great to get you in first on these results. What's your read on the ICICI Bank numbers? Look fairly decent.
Yeah, I think the numbers are fairly decent, largely in line. On the NII front, it's in line with our expectations. On the provision front, slightly elevated provision, but then there was a one-time gain of sale of investment benefits. So it was expected that there would be some over and above provision on the prudential side. So that is why PAT has come slightly below our expectation. But overall, if I see at the asset quality front also, I think the numbers are good.
And how would you peg this result against the recently put out Axis and HDFC? If you just had to peg, since these banks are in a sense competing and they're mentioned in the same club, so what would you say? Do you expect as positive a reaction when markets open on Monday as we saw with perhaps an HDFC and Axis? I am just looking at the moratorium number. How much has that come? No, as usual, it hasn't come out as a blanket statement anywhere in the result, the percentage. I'm assuming that'll come at the call. That's happened with HDFC and Axis as well, because everyone's using their own definition right now for moratorium. So a published number, I think, is a bit tricky. But yeah, if we do get that number, we'll come back to you with it. But what do you anticipate, considering that HDFC and Axis have been able to bring it down? Axis also had around 28%. Now they're looking at, 9.7% is what they've shared. Would you expect a similar ballpark here for moratorium, or you just can't say?
I would expect a decline in moratorium book. That would something that the street would also be expecting and they would like. Coming to the BB and below book, it has come to around 17,000 crores, 17,100 crores compared to around 16,600, 700 crores last quarter. So that there has been slight increase in that. My sense is that over the years, or over the quarters, we are expecting ICICI to have a lesser brunt on the asset quality side, mainly because of they have a lower exposure to riskier assets. and also, a manageable share of SME unsecured lending. Also, we like the fact that they have been constantly de-risking their corporate book. So that is also something that we like. Moratorium book is something that will be keenly watched out for. That will be important. But apart from that, I think numbers seem largely